It's the big banks index, and listen, it's an ETN. That's one thing you need to know. There's a moratorium on leveraged ETFs, but you can launch leveraged ETN. So they've come along and said, hey, why don't we go a little deeper into the leverage space and do a little more of a pure approach. So, you know, when you hear about bank earnings, this is trying to say, hey, let's play bank earnings and not all of financial. So it's expensive, but so are all leveraged products. Still pretty new at 30 million. Oh, that's pretty big for that. But again, that leverage 3x is the big thing you need to know. Let's look at it compared to the two other ProShares and Direction Financials leverage ETFs. And what really sticks out here is the bank exposure. Obviously, way higher here, a little lower here. And this has some diversified financials like Schwab as an example. And then here you're going to have insurance companies. You have none here. So you can see that you're just going pure towards the bank play here, and also pure in the number of stocks, only 10. So again, more juice here for the bank play. Now, let's look at the past few weeks because banks had a good earnings. So you would hope this popped more, and it did. You can see this is the BNKU here, and this is the other two here. So because you didn't have the other financials and insurance companies, this was able to go a little higher. But again, what goes up can come down. So again, Scarlet, you know, I like to call these power tools. Really should be used by professionals, but it's interesting innovation on that line.
All right, still with us right now, Scott Acheychek of Rex Shares, and Eric calls them power tools. They're only to be used in certain occasions in that they're short-term investment products. They're not buy and hold products. Do you tend to see a pickup in interest and activity around these leveraged bank ETFs during earnings season?
Yeah, absolutely. So we only launched these recently, so they are starting to gain some popularity, and we're really trying to get our name out there. But the whole goal there, like Eric alluded to, there's a moratorium on new ETFs coming out that are levered and inverse. But there's also a moratorium on innovation in the levered and inverse space. So what we're trying to do is use that ETN wrapper, kind of create what people want. When you're trading around bank earnings, I'm not sure you want 254 holdings that include insurance companies, REITs, exchanges, credit card companies, banks, regional banks. I think you're looking for more of a pure play, and that's what we're trying to do here.
All right, also the steepening yield curve, the 2-cent spread widening since late August that we have right now is another theme that gets people more interested, more excited about banks as well. That's got to make your ETF more attractive to them too. Absolutely.
So there definitely is a sentiment, and there's definitely a lot of talk about bigger banks being in better position than regionals as we kind of go forward here in this space.
Now, you have another one, the biggest one, if that's BankU, this one's FangU, which I'm not surprised is the most popular.
Which you coined again, too, because we don't know if anyone calls it.
Somebody's got to do it. So this is not tech, but just Fang plus a couple other companies that are in that Fang world, like Tesla, et cetera. So talk about this one in terms of why you tended to do it. Obviously, we've had other guests on talking about the difficulty of actually playing Fang through an ETF because you have to take other things with it.
That's right. That's right. So when you look at Fang, and actually let's say you spell Fang with 2 A's. So you get the 5 names in Fang. That's now, because of the new GICS classifications from the last couple of years, that's now in 3 different sectors and 3 different categories. So you have Facebook, Netflix, and Google sitting out there in communication services. Right. You have Amazon in consumer discretion, and then you have Apple in Tech Select. Now what's interesting about Apple being in Tech Select, that's by far like the ticker. That's what people think about when they think about tech is Tech Select, but it's also joined by Visa and MasterCard in the top 5 holdings, which makes it really interesting, right? Because I think the whole world of tech investing, not just from GICS, but also the evolution and maturation from the NASDAQ 100. So the NASDAQ is an index out there. People refer to Qs. There's triple lever Qs, which is the big boy out there. That is the 100 biggest names that are on the NASDAQ 100. So top 25 holdings include Pepsi, Comcast, Starbucks, Costco, names along those lines. And yesterday, what really took the news was Hasbro. Hasbro got destroyed yesterday, and I was kind of interested to see. Hasbro is actually a NASDAQ listed stock as well, so it's in that NASDAQ 100, albeit a little smaller, but it gets a lot of fanfare for that, but it's not necessarily what I think of true tech.
All right, so when you look at all these leverage funds, if you were to look at the long-term performance of the microsector's big tech leverage funds, and I know you're not supposed to because, again, these are short-term trading tools, both are down by quite a bit since their launch, but again, people tend to get out before that happens, right?
Yeah, so they're both down. Have you figured out how to, in a sentence, explain to a retail investor why that happens? We call it daily resetting, but how would you explain to retail why they're both down over 18 months?
It is daily resetting. That's exactly. So the trend very much is your friend in the levered and inverse market. So when you have a choppy market, then yes, you start to get hit by that daily resetting.
Very quickly here, we mentioned that these are ETNs, so there is credit risk involved.
That's right.
Talk very quickly about how ETNs work.
Yes, so ETNs are issued by a bank, so they're a bank note. Banks are promising to pay you the performance, in this case of big banks or maybe big tech. So they're on the hook for providing that performance, but the interesting thing there is that there's no slippage, there's no tracking error. You're getting the performance of the banks or tech minus the fees.
Got it. And you used to have leveraged VIX products, if I remember correctly, but you're now focused on sectors. Why the change?
Yes, I think that a lot of the world has changed in the VIX space after February 5th of a couple years ago. So we kind of repivoted our focus and put it out there on the ETN side, focused on the building out FANGs and big banks.